Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. One more thing before we get started, you'll see in the description of the video there will be this section here, which is click on this link for descriptions, links to the other videos mentioned in this preview on different topics about the SPX indicator. So this is a Google Drive link. I'll show you where it takes you to now. So when you click on that link for the Google Drive, this is where it takes you to, which as you'll see is a list of different topics and links to the videos on the specific topics. These topics go into more detail. We may reference some of these topics very briefly in today's video, but when we reference to go look at the video that provides more details, then you'll just simply click on this link and go to here, and then you'll be able to click on the link that you want to see a more detailed video on a certain topic. Thank you. Hello, in today's video we'll be taking a look at the Wednesday, November 26, 2025 trading session for the SPX index. We'll be utilizing the Day Trading GPS SPX Daily Key Levels indicator, specifically the V2.0 version of this indicator, which was just released a few weeks ago. Okay, so some of you may be already familiar with how this indicator works. For those that are not familiar with how this indicator works, I would invite you to look in the description of this video underneath the video in YouTube, and then you will see links and descriptions to other videos, one of which is a general overview video on how this indicator works. So I would invite you to take a look at that video, as this video is going to be a condensed version, which we're not going to go over how the indicator works. We're just simply going to go through the trades for today's session. And you can also take a look at the links to other SPX sessions in which we did go over the full session, as well as details on how the indicator works. In those sessions, those videos are about an hour or a little bit over an hour long, if you'd like to take a look at those. And also, as mentioned in the preview to the video, there is also a Google Drive link that will take you to a Google document that will have links and descriptions to videos that go into fuller detail on specific topics concerning the video. So I would invite you to also look at those. Okay, so in today's session we have the 9:30 a.m. opening candle closes above the bull bear key price level. It is still within the acceptable range for a trade off of the bull bear key price level, so that is our bullish entry signal for a trade off of the 9:30 a.m. opening candle. With this indicator, you have three different option strikes that you can use on any bullish or bearish trade off of any of the main key levels. The main key levels with this indicator being the SPX bull bear KPL level, or any of the main R1 through R6 levels, or S1 through S6 levels. The midpoint levels and the QL levels serve other purposes. You do not take trades off of those levels. They serve as, in the case of QL levels, tight stop losses above and below each particular level, which in this case we just have the ones turned on for the bull bear KPL for today's session. And then the midpoint levels serve a couple of other different purposes, one being the standard stop loss levels for bullish and bearish trades, depending on which level you're taking the trade from. and then they also serve additional purposes as far as thresholds for trades that are moving in your favor, and also for gauging continuing momentum. So the only levels that you take bullish or bearish trades on with this indicator are either the bull bear KPL level, or the S1 through S6 levels below, or the R1 through R6 levels above. Okay, so the standard stop loss on this bullish entry on a trade from the BBKPL level is the first midpoint below the BBKPL level, which for today, that midpoint level is this mid BBKPL S1 67.7207, and the tight stop loss is the QL level below the level we're taking the trade from, the BBKPL. So that is this level here, the QL below the BBKPL. In today's session, neither one of those was ever in jeopardy. So in today's session, neither one of those was hit. As you can also see, price also stayed above the bull bear key price level, coming back down to test it, but still closing above it even on these candles here. So if you did not enter on this particular trade here on the 9:30 a.m. opening candle, then you could have also entered here in this range here, where it came down and stayed above and started closing back above, as all of these candles here were still in the acceptable range for a trade on the bull bear key price level. However, the 9:30 a.m. opening trade is a part of this daily key levels trading strategy with this indicator. It is an optional trade under the strategy. However, as you'll see in the videos, of all the videos that we make on the SPX Daily Key Levels indicator, we always take the 9:30 a.m. candle trade as long as it is within the acceptable range, of which the acceptable and unacceptable range for 9:30 a.m. opening candle trade, the details for that are found in that Google Drive link to the other videos on specific topics, and that is one of the topics covered in one of those videos on what is an acceptable range and unacceptable range for the 9:30 a.m. opening candle. And that particular provision would also apply to the acceptable and unacceptable range for other levels as well. However, that video specifically is talking about the 9:30 a.m. candle. But if you do watch that video, that also has an accompanying PDF document to it which goes into more detail. The acceptable and unacceptable range would also apply to trades that you would take, whether bullish or bearish, off of other levels as well as the session progresses, if you take other trades off of other levels as the session progresses. Okay, so as I mentioned, there are 3 strikes you can take on any bullish or bearish trade from any of the main key levels. In this particular session today, the trade is off of the bull bear key price level. So now I will go over those 3 options that you have. The standard play is going to be an at the money 0 DTE strike. With this indicator, you can also use 1 DTE. However, earlier on in the session, it is more favorable to use the 0 DTE simply from a pricing standpoint. However, just to clarify, with this strategy, with this indicator, you can either use a 0 DTE or 1 DTE if you prefer 1 DTE over 0 DTE. And in that Google Drive link, you will also see a video that goes over the pros and cons of 0 DTE versus 1 DTE, as well as links to session videos where we tracked the prices for both entries as well as the target prices as the session progressed, to show you the differences and how the behavior of 1 DTE versus 0 DTE as far as cost versus benefit. So if that's of interest to you, please also take a look at that video. Okay, so in this case, the closest strike to the level we're taking the trade from, the bull bear KPL, 67.8572. So the closest At the money strike is the 67.85 strike. In this case, a call option since this is a bullish entry. The price on the 9:30 a.m. candle close is $20.90. That is the ask price on the close. The next option, or the second option, is going to be a slightly out of the money option, and how you figure that out with this indicator is you take the level you're taking the trade from, in this case the bull bear KPL. The direction of the trade is up since this is a bullish entry, so we go to the first midpoint level above the level we're taking the trade from, 67.9938. So that is going to be the 6,800 call option. The price on the 9:30 a.m. candle close is $11.80. That is the ask on the candle close. By the way, we're on a 2-minute chart. The 2-minute chart is the recommended time frame to use with this indicator for this particular daily key levels option strategy for use with this indicator. However, you can use a 1-minute up to 5-minute chart for this particular strategy as well. However, as you'll see in all of our SPX session videos, we always use the 2-minute chart because we have found that to be the best performing chart time frame for this strategy within the 1-minute to 5-minute range. The furthest out of the money strike you can consider on this trade is one full level above the level you're taking the trade from. We're looking above since this is a bullish trade. That is our 168.1303, and the closest strike to that is the 68.15 call. The price on the 9:30 a.m. candle close for that is $5.70. That is the ask on the candle close. With this indicator in this strategy, there are two different types of trades that you can take. One is a scalp only trade and the other is a regular trade. On a scalp only trade, you are only looking for a 1-level move in your favor to close out 100% of your contracts. So on scalps, there's no stop loss adjustment, there's no other adjustments, you're simply in and out of the trade. So on a 1-level move in your favor, you are closing out your trade, and then you're free to look for another trade opportunity should one present itself. As you can see here, we have the bid prices on the candle close for the 11:04 a.m. candle. The prices on the candle close for the 67.85 call, 32.40. That is $1,150 profit per option. For the 6800, the bid on the candle close 19.90. That's $810 profit per option. And on the 11:04 a.m. candle for the furthest out of the money, 68.15, $9.60. That is a $390 profit per option. On the 11:40 a.m. candle, it hits the mid R1, R2 level. That is a 1.5 level move in our favor. And how you figure this out is 1 level move in your favor. So you take the level we're taking the trade from, the bull bear KPL in this case. You look 1 level above. Since it's a bullish trade, we're looking above. 1 level above is R1, so that is the 1 level move in our favor on that. And then we have the midpoint level above that. That is now the 1.5 level move in our favor. As you can see here, price of this level is kind of covered up by the candles here, but that is the midpoint level here. That is the 1.5 level move in your favor on a regular trade. On a regular trade, that is the minimum required 1.5 level move. And on the 67.85 call, the bid on the close of this candle, 45.10. That's a $2,420 profit per option. For the 6800, the bid on the close of this candle, $30.90. That's $1,910 profit per option. And the 6815 for the center of the money, $17.90 bid on the candle close, $1,220 profit per option. When it meets the minimum 1.5 level move, you can either 100% close out all of your contracts, or you can adjust your stop loss to break even, meaning the price you paid for the option, or break even plus a 10 to 15% profit buffer. And in doing so, you're looking for an additional move up to succeeding levels above that. Or if you're trading multiple contracts, such as say 3 contracts, 4 contracts, 5 contracts, or if you had 10 or 20 call contracts, then at the 1.5 level move minimum threshold on a regular trade, then you also have the option, if you're trading multiple contracts, to close out 70 to 90% of them at these prices here, and then adjust your stop loss to break even, or break even plus a 10 to 15% profit buffer on top of break even on any remaining runners. So again, please look, if you've never seen videos on this indicator before and you want to know more about how it works and what all of the other levels mean, please look at that general overview video, which the link to that is in the description of this video. Or you can also look at our other full SPX session videos, which are generally an hour to an hour and a half long, in which we explain how the indicator works as well. Okay, thank you for taking the time for watching the video today. If you are interested in purchasing this indicator, we currently have Black Friday specials, which are larger than normal discount on our indicators this week for Black Friday. Those specials will end on this Saturday after Thanksgiving. So if you're interested in purchasing this indicator in return for you taking the time to watch this video today, you can send us an email at daytradinggps@gmail.com, and we will send you the Black Friday promo code for this indicator. All of our indicators are sold on a one payment for lifetime access basis, which means that you make one payment, then you have access to the indicator for life. And that also includes any additional updates or any additional versions of the indicator which are released in the future. You will get those at no additional charge due to your lifetime access. We are planning on coming out with a V3.0 version of this indicator in the very near future, which will have significant enhanced features to the indicator. When that happens, the price of the indicator will be going up substantially. So if you have an interest in purchasing this indicator, then this is a good week to buy it, as you will get the highest discount due to Black Friday, and you also get the lifetime access, which will also give you the V3.0 version at no additional charge when that comes out. Otherwise, if you wait till the V3.0 version comes out, you will be paying a much higher price. Okay, so thank you again for taking the time to watch this video. If you did like it, please hit the like button, as that helps us with our YouTube algorithm, and we would appreciate that. And then if you'd like to be notified of any other videos that we put out on this indicator or our other daily key levels indicators, please subscribe to the channel and you'll be notified when we post other videos. Thank you again, and I wish all of you a happy Thanksgiving and wish all of you prosperity in all your future trading.